Hi everyone, welcome back to my channel. My name is Mairead and I am here to help you understand your payslip a lot better and to help you get tax back for free. So today I'm going to be looking at a teacher's payslip, this one right here, and I wanted to thank the follower who allowed me to use this payslip as a great example to run through. But they were actually one of my clients in my consultation, so I have permission to use their payslip. In today's video, I'm going to be showing you everything that you need to know about the payslip and from your gross earnings, your deductions, and this hot mess down here that is quite hard to understand. So I'm just going to go through the whole lot of it, and any black marks, and these are just personal information that I had to hide out. So just a few notes before I get stuck in. This is a payslip for just a regular full-time teacher, primary school teacher. And just to be aware that every payslip is going to be different for absolutely every single teacher in the country. It depends on your scale that you're on. It's going to depend on a lot of different factors. Your own personal circumstances as well are going to come into play. So you're not going to be on the same, just because you might be on the same scale as the teacher next door to you, it doesn't mean you're going to be paid the exact same. I did a post on my Instagram during the week to find out the questions that you want answered in this video. So a couple of things that are coming up quite a lot are to do with the pensions. Some people are asking, they don't know if they're on a pension or they're paying into one or not. Another thing that's coming up is the maternity. If somebody is returning from a maternity leave, what happens to their pay? Or it looks like something has happened to their pay, it's gone down a bit. For today, I'm going to focus on this payslip and answer a lot of those questions as I go along, if I can. So the format for this video is I will jump over to my laptop and do a screen share on that, so I can go down through each part, because there's no point in me showing it to you on this. I actually did this back 2 years ago on my Instagram on stories, and it went down really well. A lot of teachers got in contact with me and they were very grateful. They understood a lot more about their payslips, so the feedback has been really positive. Another reason I want to do it on YouTube is to reach a wider audience, because not everyone is on Instagram or Facebook. So if you know anyone that this might be useful to, please send it on to them and I'd be very grateful. So I normally split the payslip into 3 sections. So up at the top here, this is going to be section 1. The body of the payslip is section 2 here, and then this hot mess down here, which looks a little crazy, this is going to be section 3. So I kind of work my way downwards. So I'm going to start at the very top and dive straight in. So our payroll period for this payslip is 2022-06. That means it's the 6th week of the year 2022. This payroll covers the 18th of January to the 31st of January. So as you know, teachers are paid fortnightly, so that is the period covered in this payslip. And then the issue date on the right hand side, the 3rd of February, that's the following Thursday of this pay period. So that means the payroll is issued on this date, and perhaps it's actually paid on this date, if not the next day. The roll number, which I have obviously marked off, is specific to the school that you're currently working in. Scale point on the right hand side, this is 13 for this individual, and this is really important to keep an eye on once you start teaching, or if you're a newly qualified teacher, just to keep an eye on this each year. So a lot of the information on the second line here is going to be personal to this individual. So their PPS number is here, the payroll number. This might be actually an indicator of the department for payroll purposes. You don't need to know anything about this, don't worry. The only other thing you should take note of is the employer registration number. So this, for the majority of teachers, this is going to be the same number throughout their entire career, because you're paid by the Department of Education. Okay, so the next part here, these 2 lines here actually, that sometimes people may not read or take any notice of, they're actually quite important. So if you ever see a minus figure in a deduction, so if any of these are minus, that means you're getting a refund of tax for that particular item. So it's just something to be aware of if you ever see it, which is a good thing, obviously. Then if you ever see E in tax code, which I'll get to later, it's down here, or under tax basis. That indicates emergency tax, and you will need to find out why you're on emergency tax, but I can cover that in another video as well. But it's just good to note that they have indicated that on your payslip, and sometimes it can be just missed. So this is their gross earnings and this is their fortnightly salary, and this, if we were to annualize it up to their what they would be getting over the full year, it works out at approximately 53,500. Like I said at the start, that every payslip is going to be different to the person working in the classroom next to you, or your friend or family, whatever it is. So in here you're going to see different elements of pay that another person might be getting. So for example, vice principal or principal roles, you're going to have different indicators here listed. So you might have principal allowance, and you might have extra qualification allowance, summer program. You might have all different elements of pay listed here, and they will all be taxable just like as if you're getting the basic pay salary. Moving over to the right hand side, we're going to look at our deductions next, and this is where a lot of people had a lot of questions. So I'm going to start at the top and work my way down. Tax at the top. This is also called PAYE, and sometimes on other payslips the term might be used PAYE or income tax. It can be worded differently, but it all means your income tax payable. This is the most common figure that people look at and they're like, why am I paying so much tax? It's kind of alarming to a lot of people when they look at their payslip and they get afraid of it. And I'm going to show you the things that you need to look out for to make sure that you know that this is right. I won't be going into the specific calculation of this because I don't want to make your brains hurt, because you don't need to know this, but I'm going to show you the things that you should be looking out for. Once you can see that you are on cumulative tax basis down here on the bottom of your payslip, you can be reassured that everything is in working order and that your tax is being calculated correctly. Obviously that may not work for some people, but in general, if you see cumulative, you know that things are in good shape. If you ever see week one basis, or it'll be called week one here, or you might see, or emergency, that's when you need to figure a few things out to make sure. You just need to check what's going on there. And also under tax credit here, if this was ever blank, you need to just figure that out to see what's going on. But in general, for a teacher paid fortnightly, the average would be around 135.25 here as a tax credit, and I'll show you later on how I got to that point. But just so you know you're on right track, that you see this figure and it looks quite large, don't worry about the actual figure of what it is yet. Just have a look at the tax basis here. Once you know this is on cumulative and your tax credits are looking up and around this amount, you don't need to be worried. I have gone and done a calculation behind the scenes to make sure that this figure is right for this individual, and it's in top nick, it's fine, it's correct, honest. So basically, this individual, for this payroll period, they've earned $2,057.26, and if you pop down to their cut-off point down here, so this cut-off point means that they can earn up to this amount, $1,437.80, and pay tax at 20%, and any euro earned over this amount will be taxed at 40%. So for this person, as they are on 53,500, I think it was, they are on the higher tax band either way. Just a quick note then, for anyone that's working provision work during the summer and they are a regular full-time teacher as it is, the provision work, I will do a separate video on this to explain it further, but basically this is, in the eyes of revenue, a second employment, because you are sometimes paid directly through the different schools and might not always be paid by the Department of Education. So if it is paid by the Department of Education, you should be fine. They'll just include it on your pay slip. You might see provision pay come up here and a lump sum, and it could be taxed as normal, and you pay a lot of tax on that payroll as normal as you would anyway. But what happens sometimes is the provision work is paid separately on a separate pay slip, and up here you'll notice that there'll be a separate employer registration number, which in the eyes of revenue, that's a second employment. And what happens is they don't allocate any tax credits and reliefs over to that second employment, so you'll pay 50% in tax. They'll recognise it as putting you on emergency tax. So a lot of people ask me, how do I get my tax back on that? All you need to do is wait till the year end and do your income tax return. and they will balance up everything over the year to see if you are owed any tax back. But as a general rule of thumb, if you're earning extra, you're earning more, you're over that threshold into the higher tax band, so you are going to be paying more tax, so you may not get as much as you think back. Moving on, so I'm going to look at the second item here. This is your employees PRSI, and this is your pay-related social insurance, 8229. That is 4% of your total gross pay. The next item is the 1.5% spouse and children's pension scheme. This allows your pension to be transferred to your spouse or children in the event of their death in service or while in receipt of a pension. And the way that is calculated is 1.5% of your gross salary. Moving down, universal social charge. This is mandatory of every employee in Ireland, like your PRSI above here. Then we have the additional superannuation contribution. This becomes mandatory for certain teachers once they reach a certain scale point, and they get automatically included into this. Basically, it's an additional payment into your pension fund. That's what essentially it is, and it might have different criteria depending on your contributions. So the rates also depend on your scale as well, so it's going to be different for everybody. So for this individual, their pension contribution is listed here, pension grouped, and this would be for somebody who was on the pre-2013 scale, so they were qualified pre-2013. Anyone that has qualified after 2013, you might see something different. For example, it might be called Single Pension Schedule 1 and Single Pension Schedule 2. You would see these listed here. There'd be 2 line items. The final item then under deductions is your INTO fees, and this is your contribution to your union. I just wanted to note as well that in your deductions, like, everyone is going to be different, and you might on your payslip see that you have not as many as these deductions, you might have more, you might have a longer list. Like I said before, everyone is going to have a different situation. So we're finally at section 3, and this is the bottom of your payslip, which I find just looks a lot worse than what it actually is. So bear with me. So I'm going to look at the top line here first, and then the second line at the bottom. So at the start here, you're going to see your PRSI class and number of weeks. So A1, this is what most and the majority of Irish employees are currently on. You don't need to worry about a lot of this information. It's just to point it out to you. And then number of weeks, 2, that means that there's 2 weeks included in this payroll. The next couple of items we're going to look at are these 3 here. So the first one is your tax basis, and this is cumulative, and this is what you should expect to see on a payslip. If you're on cumulative, it just means that your tax credits and tax bands are being allocated evenly out throughout the year. The next item is your tax credit, 135.25, and like I said earlier, this would be the average for this individual, and I'm going to show you where you will find this information if you want to know, and if you want to know where it's coming from. And the same goes for the cutoff point, this 1400 here in 37. I'm going to show you where I get this information from. Whatever information revenue has on file for you, that is the information that is going to be pulled into whatever payroll is being done at that point in time. So like I said, it's really important for revenue to have the most up-to-date information that you need. I'm going to quickly jump over to this person's latest tax credit certificate that will show you all of this information, and it's something that all employees should keep an eye on either way. This is the latest tax credit certificate for this individual, and I'm just going to point out the areas that you should keep an eye on, and it might be of interest to you in the future. So under tax credits here, the total allowable credits for this person is 351660. That's what they're entitled to reduce their tax bill for the year 2022. Your employer is going to be listed here. I just blacked it off because the roll number and information can be there, so I'm just blocking that off for now. So they rounded it up, the 3516 to 3517 here. That's what she's allowed monthly, and then weekly, this is the allowance, the 67.64. And if you multiply that by fortnightly, so 2 weeks, that comes to the 135.25 that we see on her payslip. Then we're going to look at her tax rate bands, and this 37,383, that's her total allowable tax rate band, her cutoff. It's also called a cutoff point. That's what she's allowed for the year. So she can earn up to 37,383 and pay tax at 20% on that. Anything over is taxed at 40%. So then if you move down to the summary down here, tax rate bands, see here they've rounded it up to, well, they haven't, so it's 37,383, that's what she gets monthly, and then weekly is this amount here, 71819, and if you multiply that by 2, because she's paid fortnightly, you're going to get 43780 a year. So that means she can earn up to 1,437.80 and pay tax at 20%. Anything over this amount will be taxed at 40%. So that just gives you a quick overview of the tax credit certificate, and it's just some useful information that you should keep an eye on. There's a lot of information in this tax credit certificate that is just kind of, it looks a lot worse than it is, like a lot of things. But all you need to keep an eye on is making sure that your employer is listed under employers here. And if you have multiple employments, they're going to be listed all here, and this will show you how everything is split out. So if you're working 2 jobs, you will see the split here. But like I said, I might need to do another video on the tax credit certificate, but I'm just giving you an overview. One of the most crucial things that I will tell you to keep an eye on, and this comes up so much in my DMs, is if somebody is returning from a maternity leave or paternity leave or any form of a social welfare break, let's say, so they were possibly on illness benefit as well, all of those payments, the majority of them are taxable. So the most common ones, such as paternity benefit, illness benefit, job seekers, all of those are taxable. So when somebody comes back to work after being on one of these payments, they will notice a reduction in their net pay, and that's because revenue are collecting tax that is owed on those payments. A quick way that you can find out if you fall into that category is check out your tax credit certificate, and you will see under tax rate bands and under tax credits there will be a section included that will say tax credits reduced by, and there'll be an amount, and it'll say maternity benefit, and the same goes for your tax rate band. You'll see tax rate band reduced by, which means that revenue are basically reducing your allowable tax credits in your tax rate band in order to collect any tax that they feel they need to collect from you. Moving on to the next section, and taxable gross. This is the amount of income that is subject to income tax, and that is the balance of your total tax or your total pay, your 2057.26, minus any deductions that are allowable for tax relief. So this is really, really good to know. So the total that is allowed for tax relief is 171.29. So this plus this will come to your total salary up here. And this 171.29 down here is the total of your deductions that are allowable for income tax relief. So your pension, your additional superannuation contribution, the spouse and children's pension scheme allowance, and those are all totaled up to come to the 171.29 down here. A very common question that comes into me the whole time is they don't know whether they're getting tax relief on their pension or not. In a nutshell, if you see that you are paying into a pension from your payslip, so in this case we can see that this individual is paying into a pension here, their tax relief is sorted. They don't need to claim their tax back on their pension contributions in another way by doing it through their income tax return. You would only do that if you have a separate pension that is set up through a private company, separate. So a lot of people that do not work in the private or in the public sector, they have to set up their own private pensions, and you have to go about getting your tax relief separately. But I have a load of steps for that on my Instagram. For this case, this person is fine. They don't need to worry about getting any tax relief on their pension contributions because it's already done through their payroll, and the same goes for the additional superannuation costs as well included there. Then over here on the far right, your net pay, the 1391.71, this is what is paid into your bank account. And in simple terms, that is your total earnings less your total deductions. So the final section is the bottom part of the payslip, and a lot of this information is just information that you might need in the future, but it's not anything to be concerned about. You don't need to really be keeping an eye on it, to be quite honest. So the first part is gross pay, and YTD means year to date. So this is how much this person has earned for this year so far. The tax credits year to date is the total amount of tax credits that have been used so far. And the same goes for the cut-off point year to date. This is the amount of cut-off that they have used up for the year so far. And obviously this is at the start of the year, this payslip, so this is January, so as you can see that those figures would be quite a lot more if it was towards the end of the year. The tax year to date, this is the amount of income tax that this person has paid so far this year. Pension and AVC, so in this case it's just pension because they're not paying into any AVCs yet. So this is their total pension contribution so far for the year. PRSI year to date, this is the total PRSI contributions that they have made themselves. The ASC year to date, this is the additional superannuation contribution, the total payments that have been made so far this year. And the same goes for USC. This is the total paid so far this year, and there's no LPT, which is the local property tax. So yeah, it just gives an idea of the amounts that have been paid so far this year, but I wouldn't get too bogged down by this. I would just make sure that other information that we've pointed out is all in order. Thank you so much for watching, and please subscribe and like the video if you found it helpful, and be sure to share it with family and friends, and perhaps they might need it more than you do. So thank you for watching, and we will see you in the next video.